Hello and welcome to NDTV Profit. You're watching IPO, and the company which is coming to the markets next week is Kross Ltd. It's a company which is into manufacturing of axles, suspensions and forging equipment for medium heavy commercial vehicles and farm equipment companies. Joining me is Sudhir Rai, who is the Chairman and Managing Director of the company, and Kunal Rai, who is the Director and CFO of the company. The company's IPO is opening on September 9th, closes on 11th, price between 228 to 240 rupees per share. It's a 500 crore IPO, which includes a fresh issue of 250 crores. And at the upper end of the price band, the company is valued at close to 1550 crores. Gentlemen, thank you very much for joining us today on NDTV Profit. Mr. Sudhir Rai, to begin with, 250 crores you're raising in fresh issue. Can you take us through the objects of the issue? Where are you going to use these funds for?
Yes. Hi, good morning to everyone and to you too. So 250 crores we are raising to primarily going for our new equipments for better technologies which will be deployed in trailer axles and suspension. It will also enhance our capacities in forging in our foundry and also for our new export customers to increase their capacity. So we will be having an allocation of about 70 crores into new capital equipment from this 250 crores.
Kunal, if I can see from this, you're raising, you're going to repay around 90 odd crores. Can you give us a breakup of long term and short term, debt that you're going to repay?
Yeah, so out of the 250 fresh issue, 70 crores goes towards the capex and 90 crores would be going towards the repayment of loan and 30 crores in addition for extended working capital requirement.
Mr. Sudhir Rai, can you also take us through your business model, because you are one of the leading players in this segment. Can you take us through the business model, how it has evolved and where do you plan to take it forward?
Yeah. That's the story started about 30 years ago, and we are located in Jamshedpur, which is on the eastern side of the country, and we started in a very humble way, like most auto component manufacturers do, and started making components like UJ Kross. That's how we named the company Kross. And over the years, we have added not only just a product range, but also facilities for backward integration and also new customers, various OEMs and Tier 1 companies. So that's how we've been growing all over the last 30 years. And then in 2019, we've got into a new segment of business that is for trailer axles and suspension. Now, this segment has been growing phenomenally, and we have participated at the right time. This has also, given us the growth that we needed for this business. So now going into the future, we plan to make investments in this field of trailer axles and suspension. We want to be the major player in this country for this. And see, this particular segment is growing year on year because there is a big shift of rigid vehicles to prime movers for the past couple of years. So we want to invest in this line.
Given the fact that you have the capability to make axles and suspensions, are you going to limit yourself to the auto segment, or you will look at other segments like railways and other areas?
So railways, the axle used for the railways, though we are with the railways also, but the axle which is required for the railway is not the same what is used in the automotive industry. So that is a plain beam, solid bar, and we don't have plans to get into the railway axle. It is a totally different segment of industry, employing different technologies, and but in this area where which is used for the automotive application for the trailer application, yes, we are wanting to expand our product range in this field.
Mhm. Can you give us a sense of, Kunal, how this segment is growing, especially the trailer axles and suspensions? Because as Mr. Sudhir mentioned, you started in 2019, and within next 4 or 5 years, 43% of your revenues are coming from this segment. So how is it growing? At what rate is growing, and what kind of margins do you enjoy in this segment?
Yeah. So we started this business of manufacturing and supplying trailer axles and suspensions in 2019. And in a span of 4 years, we're one of the fastest growing players in this segment. The tractor trailer business within the MHCV sector is also growing substantially. And currently, this business of it contributes to close to 44% to our entire revenue. We are one of the manufacturers who have the competence to manufacture the parts which are fitted into these aggregates in-house. We are completely backward integrated with our operations such as design, engineering capabilities, forgings, all the machining processes, and very recently we also set up our foundry. So we're one of the leading players in this segment currently.
And how about the margins part?
Yeah, so in FY24, we delivered a EBITDA margin of 13.02 as compared to approximately 11% in FY22. In FY24, we delivered a PAT margin of 7.2%. As compared to approximately 4.6% in FY22. So with the start of this new product segment, we have delivered better margins and would continue to do so.
How do you see the mix of your revenues changing over the next few years? Because trailers and axles have now taken nearly 44%. So is it going to be in the same range, or are you going to have a higher outgo of the output from this segment?
So we basically have 3 segments of industries, the truck segment, the trailer segment, and the tractor segment. Currently, the tractor segment constitutes to close to 9% of our total revenue. And 44%, as we mentioned, from the trailer business. But going forward, we do not see a very huge, we don't see too much of a change in this mix. Our component business with our truck and tractor OEMs is also increasing. Our exports are also going to be increasing. So we plan to have the mix at approximately the same.
Okay. Mr. Sudhir Rai, can you take us through, once your capex comes into play at 70 crores, how much your capacity will go up by, and in terms of revenue potential, how much it increases?
Okay. So this influx of capital into our manufacturing systems will put us in a better place for our exports and also bring in new technologies. So the growth what we have projected in the coming years, we should be able to achieve those growths. And the technological importance which we are giving into this project, we are going in for an extrusion plant. Okay, this extrusion technology is not done by anyone yet in the country, and we want to be the first to bring it in. This also we feel will be a game changer in the production of these trailer axles and suspensions. So 70 crores being employed in this area, and for exports and capacity increases. Like for instance, you see, if you look into equipment which we are planning to buy for our forging, this will be an investment we make for the next 3 to 4 years, because in the forging industry you have to plan at least 4 to 5 years ahead. It's not like buying a CNC machine. So a good part of our IPO proceeds will be going towards investment in forging and foundry.
Kunal, what kind of impact will that have on your margins? At 13%, you've been growing your margins, but as technology comes in and as you integrate fully yourself, is there enough room for the margins to go up from here on?
Yes, so we've delivered good margins, and we plan to get into a better technology in the axle beam extrusion, which is better than the current design. And also, we plan to get into exports. We are working with a customer based out of Sweden, that is Lex, and a Japanese OEM. We've developed close to 7 to 8 product families for these export customers. So going forward, we're looking into better margins from these two segments of business.
I read in your RHP that you are, you are going to supply bulk equipment to this export firm or the Swedish firm which you spoke about. What is there a specific offtake agreement that you have, that how much you have to export to them on an annual basis once your capacity is in place and approvals in place?
Yes, we have developed close to 5 product families for this Swedish customer, that is Lex. And the company has given us a very clear strategy as to how they want us to ramp up on each of the product families. 1 or 2 components have completed their validation stage, for which the mass production has already commenced. And the balanced 2 to 3 product families we would be starting within this financial year. So we've got a very clear roadmap on how to increase on our exports.
So how much exports will constitute your revenues going forward?
So currently our revenue contribution on exports is just at 1% of our total business. But with both these OEMs that we are working with, we plan to expand on that.
Any particular target that you have set out for that?
We are mostly a domestic player. We'll take it forward as to how business goes. We've got confirmed orders backed with purchase orders and development tool costs. So hopefully in the next 3 years, we would have a much higher export revenue contribution to the revenue total.
Mr. Sudhir Rai, if you can give us a sense of the industry growth which is happening. You are supplying to the MHCV segment and to the trailer segment as well. How are these two industries growing and at what rate? Because what we hear on the ground is that CVs are little lackluster in terms of growth. How does it play out to you? Because if you are supplying to these major companies, how does it play out for you?
So yes, for the past year, you could say the growth has not been witnessed in this industry of MHCV segment. But within the MHCV segment, the MHCV segment, it constitutes of the buses, the dumpers and tippers, and the haulage vehicles, and the prime movers. These are the few segments which are this thing. Amongst all these segments, it is the prime movers which is taking a good portion of the rigid vehicles share. So our business has been growing because the prime mover segment is growing in the country. And this is right now about 25% of the total MHCV population, and it is going to further grow. See, there are a couple of incentives being given by the government, by the Ministry of Road Transport, that you are allowed, a fleet owner is allowed to carry extra load, more load on saying the carrying capacity of a prime mover is up to 55 tons. So this is a big advantage to the fleet owner, and he utilizes this, and he finds it this with the logistic parks coming out on the outer limit of city limits. This logistic parks which are made are more friendly to prime movers than to rigid vehicles. So let's say the asset turnover ratio for a fleet owner when he has a prime mover, it is better for him. So that's why the shift is taking place now in India. But this otherwise, the world runs on prime movers. It is only in India we have been seeing these rigid vehicles which have got, in order for them to increase their load, all they need to do is add more and more axles, dummy axles. So this change is taking place, and this change will drive the growth, at least for us. As far as the industry, there are a few other advantages coming in. The government has announced scrappage policy, but this has not kick-started as yet, but eventually it will. So once the scrappage policy takes place, then that is not taken off because the scrappage yards have not yet been fully built. So once that happens, I'm sure the scrappages will take place, and the government will provide some incentives in terms of GST and all that. There will be a movement in the coming years, a movement in the positive in the coming years for the MHCV segment.
Your top 3 customers account for nearly 50% of your revenues, and top 5, 66%. It's a high concentration risk that you're carrying on your books. How do you manage to diversify this kind of risk?
So we are into 3 segments. Our top 5 customers constitute to close to 66% of our revenue. But we have a long-standing relationship with all our OEM and Tier 1 customers. Customers like Ashok Leyland, we've been associated with them for the last 18 to 20 years. So we do not see any risks involved as far as our product segments are concerned. We have a very diversified segment product base. We are into not only into manufacturing trailer axles and suspensions, but we manufacture axle shafts, coupling flanges, differential spiders and bevel gear assemblies, and many other components for the agri and the MHCV segment. So we are not too concerned on the concentration of our customers.
Kunal, come in here on the working capital requirement, because I was looking at your balance sheet. A large part of your borrowings is in current borrowings, which basically means the working capital there. How will you manage this kind of high working capital? I know you're raising around 190 odd crores for repayment and additional 30 crores for working capital. But going forward, how will this impact your cash flows and profitability?
So, we are into manufacturing, and manufacturing requires a lot of assets like the forgings and the foundry, and we also have our entire operations integrated under one roof. So we do everything ourselves. For that, we do have working capital requirements, and also based out of Jamshedpur. A large part of our revenue comes in from outside the state. We have dedicated warehouses in almost all the key states of the country. So there is a certain part of an inventory which we need to have for our customers. And in the proceeds of the IPO, we have kept 30 crores allocation for our working capital requirements as well. But it would not really affect our margins going forward with the diverse product portfolio and the diversified client base that we have.
What is the current receivable days that you have?
Sorry?
What is the current receivable days you have?
If you could please repeat. The receivables, we have our receivables at currently 60 days. Our payables are at approximately 30 days, and the inventories we manage is at approximately 45 to 50 days.
Okay. Gentlemen, it was a pleasure talking to you today. Your IPO is opening on September 9th and closes on 11th. Kross Limited, price band of 228 to 240 rupees per share, an IPO of 500 crores, which includes 250 crores of fresh and 250 crores of offer for sale. Thank you very much for being on NDTV Profit, and thank you for being on IPO.